Bob Parker, Senior Advisor at Credit Suisse, is with us now to help us understand what's been happening on the markets. Bob, great to see you as ever. Let's just, not getting that top-line growth, or are we seeing some signs of it just coming through?
We're getting top-line growth in America, in Asia. The top-line growth in terms of revenue generation remains mediocre in Europe, and they're the good earnings numbers, and the numbers are very good, and I think they're consistent with a forecast for 2010 relative to 2009 of corporate earnings growth in Europe up between 15 and 20%. But that is driven by large cost-cutting, and in certain cases, like the miners, obviously very good commodity price growth.
How does that sit then with your view on the markets at the moment, with you saying that, well, risk appetite is there and you should be getting into these risky stocks?
Well, over the last week, we have increased risk, and we've done that primarily by increasing equity exposure. Our view is that after the January and early February setback in equity markets, that you are going to see equity markets advance for at least the next 2 to 3 months. What we've done in terms of increasing risk is, first of all, increased exposure to Japanese equities. Investors are and have been for the last year very underweight there. Secondly, we've increased risk to what we call the emerging market exposed
index. But you've got the spectre of deflation when you look at Japan, and how does it be? Are you confident the BOJ can deal with that? Well,
actually, it's very interesting because Japan is the one major economy where we still have deflation. That means that the Bank of Japan stays at 0 to 10 basis points. And it probably means that the Bank of Japan will be the only central bank this year to expand quantitative easing. And I think that that expansion of quantitative easing at a time when investors are very underweight Japanese equities is positive for the market.
Okay, from deflation to the prospect of inflation, is that a potential threat for equity markets in Europe?
I think not, and I think the numbers that we had out of the States on Friday tell a very clear picture, and we're seeing the same picture in Europe, which is that headline inflation numbers driven by food prices and energy prices are obviously creeping up, but core inflation remains very low, and I actually don't see any probability of core inflation increasing this year.
Very quickly, Bob, European equities, we saw them actually suffer a few weeks ago with the spectre of Greece and its debt problems. George Soros saying that these are just the start of problems for the euro. Very quickly, how do you respond to that?
Well, the problem in Europe is obviously the divergence between the successful core economies led by Germany and France and the very much weaker economies such as Greece, such as Spain, Ireland, Portugal, and where you've got a widening of that growth differential between those economies. That is troublesome for the currency.
10 seconds, top names.
In terms of sectors that we like, we continue to be long the IT sector. We like household goods, consumer products. On the utilities, I think, in fact, there is a case for increasing exposure.
Bob, thank you very much indeed.
Thank you.
So Bob Parker, there's a Senior Advisor at Credit Suisse. Now.